Hey, it's Rob. Welcome to Everyday Investor TV show. Thanks so much for tuning in. We've been doing this show for 20 years and it's not changed. We want to help you grow your money. You see, the challenge often is we take our precious time, we go to work, and we're blessed if we have a job. We get a paycheck in order to eat. Let me say that again. We take our time, we go to work, we make money so that we can provide. But imagine a life where money could make you money. You could take your precious time, work a little less if you wanted to, and spend it with family, friends, engaging in a purpose that's greater than yourself. That is what this TV show is all about. Remember, when anyone offers you any type of investment vehicle, you want to ask 4 questions to start. Number 1, what's the return on investment? Number 2, when do I get that return along with the money that I've put in? Number 3, what's the minimum investment amount needed? And number 4, what is the risk? What is the downside? We've got a great show coming up. Don't go anywhere. We'll be right back. Coming up, we speak with Anthony Maniaci about legal matters.
I do not have quite the optimistic view that some do about being on the other side of the dark days. I have concerns about the lag in interest rates and how that's going to affect the retail residential market.
Did you know that if you're selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commission. Head over to our website, everydayinvestor.com, and find out more.
Hey, it's Kyle Ford from Canada's Mortgage Choice. Are you interested in commercial financing? What is commercial financing? Commercial financing is the ability to qualify for a mortgage based on how the building produces income, not how you produce income personally. One of the most common myths is that they don't look at you personally. They absolutely are going to. However, the loan amount is qualified by how the building produces income, not you. The great thing about commercial financing is when the building produces high income, you can get a high mortgage. If the building doesn't produce high income and it is a value-add commercial financing project, these are the type of mortgages that my team specializes in. Make sure to reach out to Kyle Ford at Canada's Mortgage Choice.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to Everyday Investor. Super excited about today's episode. I'm speaking to my very own lawyer. Has been with me for a long time, helping me out in the real estate world, other things, corporate world, even just family life. Really dear friend of mine, Anthony Maniaci. Anthony, thanks for being on the show with me.
Always my pleasure.
So what's happening out in the land of Woodbridge? What's happening in the real estate world? Here we're coming into, middle of spring, 2023. The dark days, some think, are behind us. Some think, they're not quite sure what to think. And some think that it's only going to get worse. We don't have crystal balls, Anthony, but I always love to hear your opinion on what's happening let's just start off with the economy. What are your thoughts?
I'm obviously paying very close attention to what's going on, not just here in Canada, but in the world at large and obviously in the States. I do not have quite the optimistic view that some do about being on the other side of the dark days. I have concerns about the lag in interest rates and how that's going to affect the retail residential market. But on a much grander scale, I have big concerns about corporate vacancies within the commercial space. We're seeing very high vacancies within the commercial space. And, the underpinning of many of those buildings are REITs, are pension funds, And if they're not reaping the returns and or losing money, we may see some serious blowback when it comes to all kinds of things as a result of that. For example, on the residential side, if people have fixed rate mortgages that they got before we saw the multiple consistent increases of interest rates over the last little while, there is going to come a time where that lag catches up because that mortgage itself comes due and has to be refinanced. So while variable rate mortgages have been hit first, obviously, and a lot of people may even be upside down with respect to their payments and are only making interest payments as a result of how those mortgages work, we are going to see this sort of tightening of the belt and the bootstraps, as it were, I think, as the reality of not historically high interest rates, but interest rates that are high in light of, say, the last 35 years, for sure. So we have a generation or two of people who just don't know interest rates above 3 or 4%.
Yeah. Yeah, no, it's very true. And, what about the fact that a couple of years ago, the banks started qualifying people at higher rates. So they were still giving them rates around the 3%, give or take, but they were qualifying them at 5-6%. No?
Listen, it's great to qualify at those higher rates, but when the reality of less take-home income kicks in as a result of your ability to pay it, but then your discretionary income will crater. And that, probably will have the corollary effect of in the world at large, you're not spending as much on high ticket items. You may not be going on vacations. You may not be going to concerts or sporting events. And as a result, everything sort of trickles down in that sense where people are spending less. And it could be, listen, none of us have a crystal ball 100%, but we are in unprecedented times. We've never seen interest rate increases as big and as fast as we have over the last little while, for sure. In my opinion, I just don't see how we're on the other side of the dark days. I think there's a bit of a lag, and we probably won't see things. And we haven't even touched on, Europe and Eurasia and what's going on there and how that might affect the global economy as well.
Yeah, and people are, as you said, people are being careful. They're being cautious. There's a bit of a wait and see, spending less perhaps. And is that why you're referring to the commercial world in terms of, businesses?
Well, we're also seeing vacancies. We're not seeing the occupancy rates we used to see. They're just not as high, and they're coming down. So that's a mixed bag of things. That's companies reducing their square footage as a result of the new reality of the workforce, where you've got this hybrid thing where many people are taking up these sort of communal workspaces or library type workspaces as opposed to having your own office in your office. So you might be a law firm, a big Bay Street law firm that was ready to take up five floors of a building. Now you really only need 3. And we're seeing that across the board. And so it's a mixed bag of everything. But the grander concern is just where the workforce is. It's becoming much more giga, right? It's becoming much more about working online, working from home, doing things in the cloud. You don't need office space for that.
Yeah, I didn't know for sure. So, you deal with, you're an investor yourself. Again, I like to have a team around me, whether it's my mortgage specialist, lawyer, appraiser, so on and so forth. I love for them to be investors as well. Not that you have to be, but things change so much. And so I know you're a fellow investor. What are you telling people right now? People are asking you all the time, Anthony, a lot of stuff is on sale right now. Should I buy it? And if I do buy it, how should I be buying it? Or are you telling them, hey, take a wait and see approach because we don't know what's going to happen? Kind of what are your thoughts if, your nephew comes to you and says, Uncle Tony, I want to know if I should get into the real estate game. I want to know if I should get into the stock market because a lot of big blue chip companies are on sale right now. What's your advice?
So my advice to start with is always the same. go and educate yourself so that you understand yourself the state of where things are at. Now, my view when it comes to investment hasn't changed, irrespective of economy, irrespective of good times, bad times. I believe that terra firma, real estate is always a good investment because it's never going anywhere. And while it may diminish in value in a short spell, over time, real estate always gains because it's finite. We've noticed with currency, we've noticed even with stocks and bonds that the finite nature of the way they used to operate isn't so much that way anymore. You know, they print money and there's nothing backing it. You have all kinds of public companies that do all kinds of things. And all of this is outside of the control of the investor. You do your education, you hope for the best. With real estate, it's different. With real estate, while you are more active as an investor, because if you're a landlord, you have to maintain the property and you have people, tenants that you have to take care of and you have to do things a certain way, it's the great long-term play. I think history has borne out that real estate, you can never really go wrong with that kind of an investment. Even hard assets, gold, silver, those sorts of things. When you talk about the tangible, it's a very different type of investment. I think the one big change in my assessment of things is real estate is a much longer hold than it used to be, where you might be able to pull profit within 1 year, 2 years, 18 months. I think that you're looking at a longer time horizon. I think you also have to recognize that, especially with respect to the cost of utilities, the cost of maintaining that property is going up quite a bit. So you have to ensure that you have the numbers to make it work. You know, even if you lose money in the first year, if you can withstand it, that's okay. If you have to put some money in, to do whatever you need to do to realize, the proper investment. But I think the key is the concept of flipping really, really has slowed down. I think that it's the long-term hold. It's much more the sensibilities that we saw, say, 50s, 60s, 70s, and even the 80s, as opposed to maybe the 90s and the 2000s.
No, good stuff. We're talking to my good friend, my lawyer, Anthony Maniaci. When we come back from the break, we'll hear his top 5 tips of when it comes to investing. Don't go anywhere. We'll be right back.
Did you know that if you're selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commission. Head over to our website, everydayinvestor.com, and find out more.
Hey, what's going on? This is Kyle here from Kyle Ford Mortgages. On today with my better half, Chelsea. We have a very exciting announcement. You've asked, we've delivered.
We have a really exciting event, so mark your calendars, June 9th to 12th. We have networking, mastermind, some awesome content. We have a pool party, a beach party, a black tie gala. We've got it all, and you can rent your very own cottage or have an awesome room at the Kiwi Motel.
If you're looking for all things real estate, whether it's short-term rentals, long-term rentals, private lending, creative financing, whatever it may be, not only great content, but great people, good times. You absolutely do not want to miss this. Make sure you check out the link.
Hey everybody at Everyday Investor. Do you sit here and watch our videos and watch the show and wish you could invest but just can't afford these prices? Well, we at First Access Condos have a solution for you. We've started to sell Calgary. That's right. #1 livable city in the country, #3 in North America, and it's booming. Now, why Calgary? Prices 50 to 60% of that of Toronto. Rents similar to Toronto. 20% down, non-Calgary, it's only 10. Development charges non-existent. Problem with your tenant once built? No problem. They don't have a tenant-friendly province. They have a landlord-friendly province. Time to kick them out. If they don't pay, 30 to 60 days, as opposed to 12 months here in Ontario. It checks all the boxes and then some. Calgary Condos, brought to you by First Access Condos.
Hey, it's Rav. Welcome back to Everyday Investor. Talking to my good friend Anthony Maniaci. Anthony, thank you so much for. I just love hearing your personal thoughts, and you're not one to kind of mix words. You're a straight shooter. Your thoughts are your thoughts, and you've seen a lot. Your brother's in the field. Your dad's in the field. You've been in the legal world for a long time, so you've seen it all. And we could talk forever. Hopefully you don't mind that people contact you. All your information's there on the screen, so if they want to talk to you longer, I know you always welcome it, so thank you for that and taking care of the viewers. But let's just kind of niche out right now into buying a property. So what are the 5 top things that people need to consider when buying a property, whether it's a principal residence or an investment property? What would you say to them?
So listen, first off, they kind of form their own silos because you're going to have different goals, different objectives, depending on the nature of your purchase. If you're buying personally, so I'll do my best to bridge the gap between the both, but there will be differences.
So why don't we stick with the investment first? Go through the top 5 for investment.
That's what the show is, right? Of course.
Yeah.
So I will start always with what I start with always with you. Education, education, education. So when it comes to any investment, and I don't care if it's real estate, buying of stocks and bonds, mutual funds, whatever, it is absolutely crucial that you don't expect that your professional, stockbroker, financial advisor, lawyer, real estate agent, etc., will give you all the answers. You need to understand the market that you're entering into. So from an investment perspective, the things like, where am I looking to buy? Once you figure that out, you might try and figure out, is it a high rental neighborhood? Is it a low net rental neighborhood? The saturation of the number of rental units could affect your ability to rent it and the price that you get, right? So there's a lot that goes into it. If you are buying an investment property and it's condominium, what are the condominium fees? How is that going to affect my ability to break even and or make money on a monthly basis from the rent? How much money can I put down? What can I afford? Right? So from an education perspective, what I'm saying is you really, really need to not just understand real estate, but understand the market you're buying in. Are you buying in Collingwood? Is it a more recreationally based? Or are you buying in Ajax and you're renting to a single family, who's got a few kids and whatever. And the differences that those sorts of things bring matters. Can you withstand a couple of months where you don't have rentals if you're going to go from a short-term basis, say in a recreational property, versus, no, I want somebody in there and I don't want to have to worry. How about the actual tenants themselves and doing research to better understand their capacity and their ability to pay on time?
Okay, great. Love that. So you're saying educate yourself. Don't just listen to what people say. This is a great TV show to learn, but not even what necessarily Rav and Anthony say. Educate yourself. Questions like, where is there a rental demand? Is it a house? Is it a condo? What's the down payment? Do you want to buy a cottage? What happens if people stop renting cottages? Like, just make sure there's no emotion to it, that it's all about the fundamentals. That's what I hear you saying.
Yeah. Number 2. This should sound familiar to those who are regulars to the program. Get your team in place.
And who is your team? Who's your team?
Your team will and should consist of real estate agent, mortgage agent, accountant, and lawyer. If you're not a handy person, and any work that's going to be needed to be done to the property, you better have a very good, efficient, handy person. Because in the end, these things are going to matter, right? So the team is vital. Why? Having a real estate agent who you trust, that you can work with, who understands what your goals and your objectives are that you've reached as a result of, number 1, the education piece, You can now go to that agent and say, these are the things I'm looking for. It may be somebody you have an existing relationship with. That's even better. Why? Because they'll have an understanding. And as you go over time in business, relationships are great because when people understand your position and where you're coming from, it will help alleviate some of the work. Obviously, the mortgage agent, I think it speaks for itself, but having somebody worth their salt who knows what type of mortgage product you need to get into in light of the type of investment you're taking, short-term, long-term, medium-term hold, those sorts of things, the cost of the mortgage, and having somebody who's prepared to say to you, I don't think this is a good idea because your debt service is so high that it's going to eat so much of your money, you're going to lose money. And so what you don't want sycophants. You don't want yes per people, right? You don't want people around you saying, yeah, go do it. You want people who are going to sit down and analyze what you're bringing them to ensure that you're in the best position possible going forward. Obviously, the accountant will take care of the taxation side when it comes to investment properties and how best to structure those sorts of things, corporations, personally, etc. And your lawyer is sort of the catch-all who ties everybody in at the end.
Yeah. Yeah, and I think, you said something there, but I don't want the viewers to skip over. We really need to trust the people that we're working with. And I want you guys at home to really hear that, to trust. And not only trust, so that's number one, trust them. But, I trust my wife, my son, my daughter. They know very little about being a lawyer, for example. So they've also, the word is competency. They've got to be competent. So you can trust somebody, but they may not be competent. Somebody might be competent, but you don't necessarily have a good vibe. There's something in your gut that just says, I don't know. So you've got to find a realtor, a mortgage broker, an accountant, a lawyer, and maybe even a contractor that you both trust and they are competent. What's that?
Yeah, it's good at their job. I mean, and again, it does dovetail back into point one. The more you know, the more you've educated yourself, the better your BS meter with respect to those professionals will be. The better you'll be able to suss out who you want and who you don't want.
Yeah, absolutely. Okay, 3.
Time to crunch the numbers. I think that this piece is the piece, and I know you stress this on your show a lot. And I've spoken to many of your viewers over the years, and I know they take it to heart. But for those who haven't seen the show, or for those who don't fully appreciate the fact is that having a really concrete understanding of cost, not just on closing, but with respect to maintenance and upkeep, as well as just the general property tax and mortgage and the general costs that go into the monthly burn for that unit. You have to have those numbers crunched in such a way that your pencil is really, really sharp, as they say. You need to know it. So you wrote the words, no emotion. Numbers are numbers. Math is math. There is no emotion to it. It either works or it doesn't. And if it doesn't, you have to be prepared to walk.
And this is the difference, because you were going to do for me principal residence and investment. When it's your principal residence, okay, go ahead, be a little emotional about it if you want. You're going to stay there long term. It has nothing to do with investment. But when it comes to an investment and you're trying to make money, it has to do with the numbers only. And, I find a lot of men and women don't follow this advice. They feel like, oh, this is a great, I heard this is happening, or I heard, well, yeah, all that stuff might be gravy of what the municipalities say, what the government says is going to kind of happen. At the end of the day, you've got to be able to fall back on sound fundamentals. Number one being, does it work as an investment? Even if it hits the fan, does it still work?
Right. And I think that that's key. I mean, listen, the more emotion enters into these sorts of conversations, I think that there's a greater chance that a decision is made that one might tend to regret going forward, right? Because they allowed a variable in to a circumstance that really didn't call for it. It's vital. It's crucial. When you buy for yourself on the personal side, there's so many other things. So of course, motion's going to kick in. Schools for your kids and proximities to parks and work and everything else. So, there's a lot that goes into it. And so, yeah, that calculus changes for sure.
Well, time's flying. Give me 4 and 5, pretty quickly here.
And then if people quick. So on 4, I think that when it comes to the maintenance and upkeep, you need to know yourself. So this is a relative new one in the sense that I know myself. I have a lot of thumbs and not a lot of fingers, and I'm not very handy. And so every time work needs to be done, if work needs to be done on an investment property, I would have to hire somebody as opposed to do it myself because I don't have the know-how and I have 3 young kids at home and I don't have the time. So when I say know yourself, what I'm really, really saying is you need to understand what your limits are because we all have limits and those limits may increase the cost of the monthly burn. If the toilet goes and you have to buy a new toilet, do you know where to get it? Do you know who to install it? Will that person take advantage of you? How quickly can you get a plumber in? Et cetera, et cetera, et cetera. Yeah. Know yourself, know your limits, and make sure you're factoring in that contingency if there's additional costs. Because in the end, on investment properties, Rav, you said this to me over and over again. Those first few doors, you got to do it all yourself if you really want to eke out every dollar. But you got to know, can you paint? Can you get these things done? Painters aren't cheap. Even if you're just, putting white on a wall, it's not cheap. And so you really need to understand what your limitations are, both from an ability perspective and a time perspective, because this is not a passive investment.
Exactly. I was going to say that. You might be good at this, but you might not have time because you're making money being a lawyer. So then therefore delegate, right? And then especially if you don't know what you're doing, you absolutely need to delegate. Okay. And lastly.
And the last one, Rav, it's a new one. This is a new one. And it to me, over the last 18 months, this is what I've been talking to my clients about more and more when we talk about various different investments. It's something that we have not seen in decades. Patience. Your investment will not reap the rewards you might otherwise think or have seen over the last 30 to 35 years anymore. The economics have changed, and as a result, you have to be patient with your investment and understand that to realize the return you'll be looking for, it's going to take more time than it used to.
And listen, I love that. I mean, other than intentionally trying to flip a home or whatever, we should be in all investments patient anyways. And, I have money in real estate. I have money a little bit in the stock market. And I will confess to you, as I did to my wife just even yesterday, I said, honey, you need to hold me accountable. I should be checking the stock market a few minutes once a week. But generally, I want to check it every single day, see what's happening. Is it going up? Is it going down?
It's like keeping score almost, right?
Exactly. And it's
an interesting thing.
Investing should be boring, should be like watching paint dry. If it's too sexy, it's probably not good, right? And so, listen, brother, I appreciate you being on the show with me. I love when you're on the show. Time flies when we're being nurtured. Got to make sure that we have you back again very soon. Thanks, Anthony.
Anytime, Rav. Be well, okay?
And thank you guys for watching. Without you, we would not have a show. To watch this one again, make sure you go to everydayinvestor.com. You can watch this show. You can watch any past shows. And then make sure you also subscribe to our YouTube channel. Hit like, subscribe, all that kind of stuff so that you can get it right inside of your inbox. We'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.